When you look at the new norm in uranium going forward being high prices, you see that the USA has actually, it's not that they're able to fast track production, but because the resources are already known, there's a lot of the process that, doesn't usually take place like it would with the Athabasca Basin. Unless the company that you're betting on is making a discovery and it's very active and it's pumping out news about, better and better drill results, then you have a situation where it's expensive to drill, it takes a long time, and it can be quite difficult. On the other hand, when you do hit in the Athabasca Basin, you can have almost an overnight 10-bagger just like this.
Hey, Fabi, thanks for coming on the show.
Thank you very much, Denny. I'm happy to be here.
What is it, the fourth time now?
I'm sure it's only the second.
The second time.
I'm
Well,
actually not
time
sure at all.
flies. Time
It's been a
flies.
while.
Well, hey, give us your breakdown of the current market at the moment. What's your general view of the market?
My general view of the market right now is that the pain and suffering that the average uranium investor was feeling about a disconnect of the commodity going up and the equities not moving is being felt pretty much across the board now with other commodities. You look at silver and gold, maybe even copper in some instances, and you see just the utter despair in the mismatch, right? Of, okay, this commodity is taking off, but at the same time, it feels like not either not enough people believe in the move, or not the right people believe in the move. And so you're looking at the equities and thinking, my gosh, what's happening? I just saw a post recently by Hugh Hendry, who is a very well-known, a fun guy, and he's mocking,
I
he's
saw
mocking
it.
us, really.
Yep.
The gold bugs, or not even the gold bugs, because if you're a gold bug and you own gold, you've been doing very, very well. But people who invest in the mining, gold mining and other types of mining, you look at the response from the stocks and it's just not there compared to, the yellow metal. And so it's quite telling, because I think that this move is, central banks buying. It's actual M&A activity that's happening in the background. And it's a strange dynamic where I think it's going to take longer for it to happen to the equities. It doesn't mean that it won't happen to the equities. And there is that gap in time where you're like, has the whole paradigm changed? Should we just stick to the commodities, or is the average investor going to sit down and realize, okay, that is the whole point of the opportunity? When you see a disconnect in the price and value, and you assume that the future value is going to be shown and be obvious, not just to you, but to other people in the equities, and, make your investment, make your bets before it's too late. It's not that the equities haven't moved. They just haven't moved to the extent, the
Right.
levered extent that people expect.
Right. And I've had Rick Roll on the show to kind of explain this to me. The when you look at the gold miners in particular, you've got your Barricks and your Newmonts, and those guys are really doing the heavy lifting across the entire sector. And then everything else is pretty much, for lack of a better term, a lottery ticket. And so you've got a few big names carrying the entire sector, and then everything else is pretty much in the dirt. So it also kind of makes sense when you looked at the uranium market over the course of the last couple of years. Some people might claim that the miners haven't really kept up with the metal, like you say, but you look at things like CCJ. Well, they've kept up with the metal, so it depends on the miners, right?
Yes.
It's
And I
quality of
think
miners.
I think it's down to quality, quote unquote quality, seen from the perspective of money managers, professional money managers. So we have to understand that if we make an investment now and we are hoping for somebody else to bid it up and pay more for that, we have to think of who and what type of investors going to come in and bid the price up? And also, at which point in the bull market is that likely to happen? So if you're looking at, usually smaller exploration plays, they don't usually get bid up until, the later half, or the latter half of the move, because you have, this trickling down of smart people with deep pockets see the opportunity. They can only, by their own rules and regulations, they can only buy into the most liquid names. And so that's why you have CCJ, you have Chemical, moving as it should. You have, to a certain extent, Kazatomprom doing okay as well. And then you have a gap of several $billion of companies that don't exist, right? Where no money can come in from the big institutions. And then you have smaller players that can play in the small companies. And the same happens with gold. I think it was Newmont that had a massive move yesterday, a double-digit move.
Mm.
And it speaks volumes to this notion of, my little tiny, gold explorer didn't move when Newmont did, but that's because it's a different type of buyer and seller altogether. And so we have to pay attention to that and have a little bit of a reality check. Yes, I do believe that, in a good market, in a good bull market, all boats float eventually, but it's the eventually that can make or break you, because you can buy a decently priced stock and lose patience with it and just say, to hell with this. This is not moving. And then maybe you'll buy, the larger producer. And by that time, you have very little upside when, excuse me, the market is moving towards the size of company that you're actually invested in. So people need to, balance it
Go
out.
against
And
stream. Yeah.
yeah, and, balance your expectations as well of when things happen. Everything is taking way longer than anybody has ever predicted when it comes to mining, I think.
Yeah. I mean, that can either be looked at as a good thing or a bad thing. I mean, it also gives you more time to accumulate if the move does, work out to the upside in the way that we kind of predicted it will.
That's true. That's a good point. And I think it's good practice, which I haven't been doing recently. I've been just, like busy with life, but it's good to have a watch list where when you see certain moves in the commodity or in the market, you already know where, you'd like to make your investments. Or sometimes what I like to do is I see an interesting company and I think that it's not quite the time yet. I think something needs to be cleaned up in the company, etc. It's not quite ready. Putting a couple $1,000s towards it is a really good way of forcing yourself to start following the story, so that, when things do get better and they start to work towards, your thesis, you're already, partly in, and then you can increase your position as you wish. But yeah, it's a funny sector, and what's happening right now is it's quite different to what I've seen happen before.
Yeah, I mean, a watch list that is very good insight, because here's the thing, when you're creating a watch list ahead of time, when you're free of any euphoria or fear, you've created that watch list when you were of rational mind, right? Now, when things start to move up or start to move down, you're not going to make decisions with the clearest of mind. So it's important to have these decisions already made when you're clear of thought.
Absolutely, because I can guarantee you there will be stocks, and I've just done this recently. So here's my confession. There is a lull in the market. There's a sort of boredom at times where you are so tempted, especially in my place, because I report on news every single day in the junior market. And so for me, if it gets too boring, I see what looks like a discovery, and then I might be tempted to like go out and buy it, and then second guess myself, and then be thinking like, hold on, no, this is a porphyry. It's probably going to be really, really deep, and they're going to have to raise all this money in order to do that and the other? And why are they taking so long to close their financing? And, is the follow-up to their drilling gonna, be better or worse than what they've come up with so far? So it's a bunch of different questions that you're making when you've bought something when it was really hot and you just don't want to miss out. It's, the FOMO trade. And you're doing it because you don't have, you haven't decided where your allocation should go based on your own thesis. And so I highly recommend people don't do what I just did recently, which was like, I bought into a play because it was a new discovery. Then a couple of things happened, within the next 2 weeks. And then I'm like, nah, something's off here. Something's missing. I'm going to sell. And so, it was just a loss. And all I gained was experience and knowledge, which I
Yeah,
guess
I
is
mean,
better than nothing.
if you don't mind sharing, what's been your biggest winner so far in your portfolio in terms of percent gains since inception? If you
Um,
know off the top of your head.
it's hard to beat Encore Energy.
Hmm.
I believe it was a 15 bagger. So that was really good. And it's one that I'm very outspoken about because it's one that fit my criteria. It fit my style. It was done in a well thought out manner. And I allowed myself enough time to look at it, understand it, and then increase my position, as the company got better and better. And so Encore Energy as a 15 bagger, I don't think has been topped just yet. I have exited my
Nice.
position since. And every time I say, it was a great story and it was awesome, people are always like, hey, like you can still come back in. Uh, but the thing is, once you've had a 15 bagger and taking your gains, it's very hard for me personally to go back to a company and look at it, the same way, knowing how much I've already gained from that. And so to me, Anchor Energy is one of those stories where they had the right ingredients at the low of the market when nobody even could spell uranium, and they changed the company at the right time with the right people, and they made the right moves to actually, become a producer in the US. And at the time, when I was investing in them 2018, 2019, people would have laughed me out of a room if I said that Anchor Energy was going to become a producer in the US. And so it takes a certain type of management team to be able to morph the company into something that can really become a producer from being, an early stage developer. And Anchor had that. They had people, on the board that had already done it once. And that really weighed a lot in my decision making. And so this is why very outspoken. Anchor Energy was the textbook, like buy low, sell high.
Yeah. Do you still think it has? Do you think its best moves are behind it, or are there still significant jumps to come?
I think that what could happen to Encore, but it's not clear to me that this is something that they're interested in. I think that they could gain a lot from looking at the other US players and doing some acquisitions. I'm not convinced that that's what they want to do. But I also know that, they look at a lot of different things, and they've been looking, and they have obviously done some M&A in the past, which was one of the main reasons why they were able to build the company, that they have. But it seems to me like they're okay with the portfolio right now, and they're just going to try to advance the different projects. I don't know if that is going to move the needle for a lot longer, because we have to remember the USA in general, when it comes to uranium mining, you're talking about a lot of smaller deposits, right? Lower grade, smaller deposits. And so sometimes when you look at certain regions in the US, it makes sense to consolidate and just to buy up the projects around it. And, instead of having project in Texas, another one in Utah and, Wyoming and stuff like that, it might pay off to, choose a really good area and then go deeper into that area and buy up your competitors, so to speak. So I don't know. The jury's still out on that.
Which sector do you think has the best opportunity right now in terms of growth? Like if I were to give you $100,000 or any amount of money, and you had to put it in one sector, what would it be?
Oh, that's tough. You mean one commodity?
Yeah,
Or
one commodity. Or I mean, I'll make it a little easier. You can allocate it whichever way you want. But let's say, what are the percentages? Like, would you put 20% in uranium, 30% in
okay.
uranium, blah blah blah.
So I would most definitely carve out at least a third of that, maybe more, to gold developers. I think that gold developers are low hanging fruit at this moment. The price of gold is doing really, really well. It's how long it takes the market to get used to, a new pricing model. It took the market long enough to consider $1,600 per ounce the norm. And it's going to take a long time for the market to maybe consider, $2,200, $2,300 the new norm. And then that's going to trickle down in, okay, let's take a look at all the pre-feasibility studies, feasibility studies, etc. What is this actually worth? But obviously, gold needs to be a lot higher for a lot longer for that to eventually catch up. So even if you look at the projects that were, you know, I don't want to say shovel ready because permitting makes that very difficult, but projects that were at least at pre-feasibility stage and feasibility stage, and you look at, most of them I think had gold at, I want to say 1750 to 1950, thereabouts. And you look at the discrepancy back then of, their market cap, their total valuation to their NPVs, and the difference was massive. Granted, there's inflation to be considered. There's the price of oil, where is it going to go and how much that affects. There is the rising costs of, social licenses, and also hiring is not getting any easier or cheaper. But given all that, there are some really good quality projects out there that would have made sense even before this latest run. So I would give gold developers, at least a third of that, maybe 40%, 45%
Wow.
easy. Yeah. And then I would stick to smaller uranium plays in the US. I
Smaller.
think
Hmm.
smaller, yeah, smaller US plays in uranium. I think that when you look at the new norm in uranium going forward being high prices, the fact that a company like Encore was able to come into production fairly quickly, with big air quotes, and I think UEC is also, turning their taps on in August of this year, all things being equal. Your energy is also coming back online. Energy Fuels, I believe, is already producing, if I'm not mistaken. And so you see that the USA has actually, it's not that they're able to fast track production, but because the resources are already known, there's a lot of the process that, doesn't usually take place like it would with the Athabasca Basin. I love the Athabasca Basin. I think people should take a look and, have exposure to 2 to 3 different companies on a smaller scale, just to spread their bets. But at the same time, when you look at it, unless the company that you're betting on is making a discovery and it's very active and it's pumping out news about, better and better drill results, then you have a situation where it's expensive to drill, it takes a long time, and it can be quite difficult. So people have to weigh, risk and reward, because on the other hand, when you do hit in the Athabasca Basin, you can have almost an overnight 10 bagger just like this. And so having no exposure to the Athabasca Basin, I think, is as silly as having only exposure to the Athabasca Basin, if that makes any sense. So I don't know how I would actually divide it up, and how much I would put into uranium. So let's do a third gold, a third uranium, and then the last third, I would probably do half copper plays and half more exotic plays. So more exotic, I would include PGM, tin, and also maybe start building a position in something that is truly hated right now, like nickel or lithium.
I see. I see. So gold developers, small uranium companies, copper, and just like some pure textbook contrarian play like nickel or lithium.
Yeah.
So on the gold
Also,
developer,
also PGM. I think platinum
okay,
is really very interesting right now.
fascinating. Any examples of companies that kind of fit that mold? You would say for each category, like say your gold developer play.
Gold developer, I always like to come back to Montage Gold. It's a company of people who have built and sold a company for over $1 billion, if I'm not mistaken, before. And they are very active. They're in the Ivory Coast. Their project wasn't sexy for the longest time because it was not sexy grade. Uh, but the goods are there, and they kept finding more and more gold. And I think the average grade went up by quite a bit, if I'm not mistaken. And they went from, within the COVID period, they went from, I think, just resource to feasibility study within like 2 years. So super quick. And at the end of this period, they had a feasibility study that was over $1 billion. And if I'm not, I know for a fact that their assumption for the price of gold is less than 2000, because back then it wasn't 2000. But I'm guessing it was about 1850, 1950 at the very most. And their market cap was like 150 million for the longest time. You could have bought the company for 150 mil all day long for several months. And this is a group of guys that have actually done the whole cycle before, which was very similar to what had happened to Encore way back. So Montage Gold is one that is a no-brainer. I also like Banyan Gold. I think Banyan is a no-brainer. I believe they're sitting on 7 million ounces right now, also not super sexy grade. But a couple of things that really work with them right now is that they're super cheap, and they are located in a place where the M&A is like so obvious, like it couldn't get any more obvious. So let's just say that the next door mine is owned by a very close family member to the CEO of Banyan, and they would be able to, use that infrastructure if need be, which would dramatically bring their costs down, I believe, because they're in the Yukon. And so that really plays a part when you're talking about, places that are farther away. You look at grade, you're like, I'm not sure if this is going to work. Well, they have something that other companies don't have. And so Banyan is also just a very obvious play. In the uranium camp, well, I'm biased. So I sit on the board of Rush Rare Metals, as you know, and we have a deal with Myriad Uranium. Myriad Uranium has been I guess they've been making a ton of discoveries, but they can't be officially called discoveries because they're not compliant. So they went out and signed the deal for, this very interesting project, which used to be a uranium mine. And with it, they were able to find some documentation from companies past with location and drill results and all of these sorts of things about, the resource that they were sitting on. And the more that they look through this, the more they find, and the more land that they grab. And so you're probably looking at right now what's something between 15 million to 30 million, pounds of uranium. And they were last trading, I think, for under $9 million Canadian. So, obviously you have to take a look at grade and how easy it would be to pull out of the ground, and that's yet to be seen. But, bang for a buck, it's very, very obvious that there's value there. Also another one that I've had a previous relationship with is Strathmore. So Strathmore is also, they have three different projects, former mines also in their land, and they're just bringing modern exploration to, what is a known uranium mining area. So they've gone up. I've talked a lot about them, and they've come back down. And so I think that they're in cheap territory again. When it comes to copper, I currently only have one play in my portfolio, and that's about to change. So maybe I won't talk about the other copper play that I'm about to buy, so people don't front run me. But AMQ, so Abitibi Metals, is a copper play that I'm really into because it fits the bill of, here's a known resource. It was a great deal when the company got it. They were able to, I guess, almost organically promote it and talk about it. And the price rose quickly enough that they were able to raise a bunch of money and have, a really cool drilling campaign, maiden drilling campaign on completely brownfield, a brownfield project. So that's really high grade copper in the Abitibi region of Canada. If they can really work out a large enough, because we know the grade is there, if they can figure out a large enough ore body there, then I think their valuation in Canada is going to go insane. Copper, like good quality copper plays in Canada, go for a really crazy premium. It's almost like the Athabasca Basin. Some plays in Canada, in some regions, they go for a crazy premium. And I think that, that they might go for that as well. So that's Abitibi Metals. I do have a relationship with them. They are a sponsor of my newsletter. So, buyer beware. I did buy them before they were sponsored. That wouldn't change anything. So take it, take it for what you like. So that would be the copper. There are a lot of different copper plays that you could get into that would be very interesting at this point. What has really surprised me is actually the resilience of copper, like how well it's been able to hold up. I did not expect this. I did not expect such a sharp move.
No, and no one's noticing.
Yeah, no, they're not talking about. Funny enough, at VRIC this last January, I got up on stage and I'm like, guys, I got to talk about copper because everybody I talked to here is not buying copper. So if we're not buying copper, nobody's buying copper. Therefore, it's the ultimate contrarian bet. And it has turned out to be actually, the thing that moved from January to here. Go figure. It's part like dumb luck, but it was true because everybody was like, well, actually, I think the economy is going to crash. So I'm not going to buy copper just yet. So everybody was holding out for the economic change. Yeah, and that just never really happened. And in an election year, I'm not really sure that this is the year to bet against something like that. But having said that, pgm pgm is something I'm still taking a look at because it might be something that is worth just holding on to, say, platinum and palladium in, I know this is going to sound really strange, in like coin or bar form. Uh, I'm sure there are companies out there that are going to do okay, but there's a risk in buying any of the platinum companies, or I should say most of the platinum companies, because here's the issue with platinum specifically. Platinum is mostly produced by South Africa. And a strong thesis for platinum is the whole of South Africa as, a producing nation not working as it should. And so because they produce 70% plus of the world's supply, and their energy grid is very, very fragile right now, if something happens where they can't produce as much, as they should, then how would betting on those companies be any good for you moving forward, right? Because they would have to produce a lot less. And so it could be a tricky situation where you'd be cheering for them to not do well, but at the same time, if you
Yeah.
made a bet on them, then you're kind of stuck. And so I think that people that go simple here might actually really do okay. It's also produced by Zimbabwe and Russia, and I think those are just harder to invest in general. I'd be like, start looking at platinum and palladium and even rhodium, uh, but try to match your thesis with your bet so that things make sense and you don't actually do something that's counterproductive in your portfolio. And then man, lithium, I like Patriot. I really like Patriot battery metals, in James Bay. I think that it's a true discovery, and the size is there, the grade is there, the jurisdiction is there. Quebec is actually really good for exploration, and I think that they had enough, I guess, um, disillusionment, if that's even a word, of the whole market, just kind of having its bottom fall out. And I think they were a victim of that. It has nothing to do with the company and how they've been able to run it. So I really like Patriot battery metals for lithium. And I'd be looking at nickel here as well. I don't have any names to speak of just yet with nickel, but nickel to me is probably next to silver would be the most hated metal. Silver is actually starting to get some love because of gold, and whoever invests in silver is extremely bipolar, right? It's either the savior of all commodities or just an absolute trap. Don't ever touch it. It's a curse. And because I think that silver bugs are flipping right now, maybe silver doesn't have the top spot for most hated metal right now, but nickel is just, nobody wants to touch nickel, man. Nickel is cursed right now.
Yeah, I mean, I used to be a nickel mining holder, but I've long since sold those shares earlier in the year. So that could be a sign. That could be a contrarian sign. Who
It
knows?
could be, who knows?
Well, hey, Fabi, we really appreciate your time. Go ahead and tell the audience where they can find you. What are your socials?
Cool. So I call my brand The Next Big Rush, and you can find us anywhere. So there's the Next Big Rush newsletter, which is the .com. It's a daily free newsletter of what happened in mining today. If you don't like it, you can get all your money back. That's a hard promise. And there's also the YouTube channel and the X, formerly known as Twitter, also The Next Big Rush.
Fantastic. Well, you guys go check out the next big rush, but also subscribe to the channel if you haven't already so we can keep getting guests like Fabi on the show. Like this video, comment down below. Let me know what you think. What did you think of Fabi's assessment of the commodity sector at the moment? Do you agree or disagree? Let me know down below, and I will see you in the next episode. Bye, all.